Good morning, everybody. Welcome to the Flow Show. It is Monday, the 30th of June, end of month day, and we'll see what fun and games that brings later on. A bit quiet in the markets so far this morning. We've got a busy old week ahead, a shortened week as well with the US holiday on Friday. So we're going to be cramming everything into the next 3 or 4 days. Morning, Kay. Good weekend.
Morning, Ryan. Yeah, relatively quiet. So yes, pretty cool. And as you say, very busy week that we have on the calendar this week, right?
Yeah, absolutely. And we'll go over that in not too long a time. Right, let's get through some of the bits and bobs first. Going to start with a bit of data out of China. PMI data from those guys. This is the headline or the state PMI numbers coming out here. Manufacturing improving a couple of points to 49.7. Services as well improving by 2 pips to 50.5. According to China's Securities Daily newspaper, apparently the PBOC has signalled less urgency to cut RRR and interest rates in there. They do a sort of a quarterly outlook thing. They've apparently removed some text which says selecting opportunities to reduce the reserve requirement ratio and interest rates line. And they've replaced it with flexibly grasping the intensity and rhythm of policy implementation. Go work out that forward guidance. But apparently these guys in China reckon it means they are not so much in a rush to cut rates again. Part of that due to the boost in GDP and the economy in the early part of the year. But that may have happened in Q1 with all the trade stuff going on. We need to see whether that continues in Q2 or things go backwards a bit. But anyway, that was that from the Securities Daily. Over in Japan, Japanese and US trade talks are dragging on. They seem to still be at loggerheads over all the different components. The US is said to want Japan to buy more oil, which they've already hinted or told us they were happy to do so, but whether it's enough or not remains to be seen. But that's carrying on. We are well into the trade deadline time zone now. This week could be finding we get a bit of a crunch point ahead of the holidays, but expect that to be a bit more of a focus as the days progress. Nissan could be in some further trouble. According to a company email, they've asked suppliers to accept delayed payments so they can free up some cash. So apparently they've offered their suppliers the option to be paid or on time or a higher payment later, saying that they've incentivized some suppliers at no cost to them to support their cash flow. They are apparently aiming for sufficient liquidity to weather turnaround actions and redeem bond maturities. It's also been announced this morning that they are looking to potentially cut 5% of their workforce in the UK. Kay, are we going to hear more of these type of stories? Is this trade related, or also have faced various problems with shutdowns and whatnot?
They've had problems before, but yeah, it's never a good news when a major car maker needs to resort to request for delaying payments. It's I think Nissan is just in a bit of a how do you call it, like a small street, and can't really get out of it right now. So just a continuation, I think, of their problems, but it comes at obviously a very wrong time with all those tariffs and stuff, and we're companies should actually or are asked to invest more, they can't. So no, I'm not sure it would see a spillover effect, or that other car makers like Toyota or Honda also are having the same issues, but Nissan to me doesn't look great right now.
Yeah, so I mean, why would they, sort of going to suppliers is a sort of feels like a last resort. It's not as if they haven't got access to cheap funding with rates the way they are in Japan. So what could be the story there? Are they maxed out on their plastic, or they just don't do that sort of thing in Japan?
We know that they have been in a bit of a pickle since months. Yeah, with those. Renault and Nissan breakups and reties and what not, and I think a lot of money got spent on lawyers. No, but really, I think is it the last resort? I don't really know. Imagine that we get a trade deal between US and Japan. They could all of a sudden see a revival, but right now they are not looking great in great shape, Nissan, I must say.
Yeah, absolutely. What's this? We've got the ECB strategy review out. Long story short, they say all tools remain in the toolkit, so they're not changing anything in that strategy review. Okay, right, move on from that then. Right, more data this morning. We had final GDP numbers from the UK, nothing of note there. GDP coming in quarter on quarter 0.7 as previously, year on year 1.3 as the previous revisions, better on the quarter versus Q4, but a little bit worse year on year versus Q4. Again, a lot of trade related stuff in there. The UK government was also been celebrating the fact that the UK-US trade deal has kicked off. We're in it right now. So we were the first to get a deal with Trump done and up and running. Oh, it feels so much greater over here now. Right, moving on. We've had a lot of inflation data out from Germany, starting off with the import price index, which was softer on the month than expected, softer on the year than expected. Retail sales as well. Let me check that quickly, because I thought retail sales were reported down.
Yeah, they were down.
Yeah, down 1.6%. Oh, there we go. There, I was looking at that number there, year on year. Sorry, yeah, there it is, 1.6% a loss. So things are not booming yet in Germany, and whether there's infrastructure spending that they're going to be doing, defence spending, is going to impact the consumer remains to be seen. But I don't think faster trains and buses are going to make retail sales pick up any more than they have. So still in the mire there in Germany. We also got the regional CPI numbers as well. A little bit of a mixed bag, some up, some down. The big one, though, is the North Rhine-Westphalia number. That came in lower. That's one of the biggest regions over there. Lots of stuff going on there. But as you can see, that was down. Saxony was up, and so on and so forth. Some unchanged like here. So not much of a read from that, except that inflation might be a bit stickier, or maybe we've not seen it go lower just yet. These are June numbers, of course. ECB's De Guindos has been out saying that Q2 and Q3 growth will be almost flat, so might as well write off the year from now on. He's obviously really packing his bags. He doesn't have to do anything till Q4. It says consumption as a driver hasn't happened. It says he's seen remarkable service inflation deceleration, and that the inflation figures have been positive. He says current interest rate position is correct. It says rate policy is compatible with convergence to 2%. Markets are optimistic despite all the uncertainty and mess. They did say that market valuations are very high. Coming back to some of the data from last week in the US, we had those PCE numbers, of course, and Powell close on his guesses. He got the headline number spot on at 2.3%, though the core number was a point hotter than expected at 2.7%. Both of those measures going up on last month in the PCE. Now, this was a moment where the market sort of took what it wanted to out the data. Even looking at the monthly PC numbers, they were all hotter. The super core that everyone looks at was hotter as well. But what we saw was income and spending coming in negative, particularly that income number was the worst since I think September 2021, and that's what the market really jumped aboard. Real personal numbers negative, personal spending negative. So we saw the dollar getting a bit of a whack. As I say, the market being a bit selective in what it wants to do. Still we want to hit the dollar on any minor bad news. Now, those numbers did look bad. However, as our mate TimmyLeaks pointed out, that loss largely reflecting a plunge in social security payments, which were boosted due to large retroactive payments earlier this year. So a bit of a washout on positive numbers previously. He noted that incomes from wages and salaries for private sector workers rose 0.4%. So take that all into account. Inflation was hotter, which is what Powell's been telling us that he's expecting now. Whether this is the start of a period of hotter inflation to do with tariffs or not, we don't know, but it's coming hotter. So on the inflation front, this is backing up what Powell's been saying. Market-wise, it doesn't really care. It just wants to hit any bad data. So mixed data overall for those numbers there, depending on your viewpoint. Michigan, these were the final numbers, that saw an improvement slightly to 60.7 from the flash 60.5, confirming it was well up over last month. The inflation metrics as well, also coming down a pip each over the flash numbers and well down from the prior numbers as well. So that's going the right way. Sentiment improving a little bit. Kay, that data seems the market still wants to hit the dollar with a stick.
Yes, although the last couple of moves that we saw, it always managed to come back from the brink of breaking bigger levels again. We see that in a lot of currency pairs now. Of course, we are still end of month, end of quarter, especially today, last day of the month. There could be a bit of strange price action ongoing. There's one particular currency that gets bought every month, it seems. But we'll talk about it later, I'm sure. But about the dollar, yeah. But whatever TimmyLeaks can say, it's still a negative number. It could have stayed flat, and give backs after increased spending or increased income are never good anyway. So I think the market takes those things at face value. We have to obviously know where the next set of data are going to come in. We've been talking about that so often. We need a string of those negative data also to continue to hammer the dollar, I think, or to give the longer term investors still their bone to continue to chew on. Yeah, regarding inflation, sticky. You know what? Just for now, and I've been saying that for a while. I think the Fed may still, even though Powell continues to talk about it, but the other Fed heads are starting to look also a bit more at the second part of their mandate, and that I think is going to take to have more importance than inflation, unless inflation starts to ramp higher, of course. But for as long as we are sticky around here, I mean, 2.7 core, 2.3 headline. Okay, it stopped, but maybe the danger line will be 3% again, Ryan. If we start to go close or above that they won't like at all. But I think for as long as we hop around here, it's going to be sticky, but still not overly far from their 2%-ish target. They were always saying like it's not 2% is a number, but for as long as we take the direction of, they should be happy, at least not to have to hike rates.
Yeah, absolutely. Yeah, 3% is a good marker. We saw it with CPI. That CPI was above 3% for 4 years. Only just in the last couple of months have we seen it come below that number. But yeah, if we're getting back above it, then the market might start believing power a bit more that rates will stay on hold. Anyway, after all that data, well, particularly after the PCE data, September is the date that the market is looking at for the Fed to start rate cuts. So looks like it's discounting July. And we've increased bets on possibly getting 3 cuts this year. Fed's Kashkari, he also touts September. He says he continues to expect 2 rate cuts in 2025 with a possible first cut in September. Says that if the Fed cuts in Sep and the tariff effects show up later, that they could still pause rate cuts. Says official data so far reveals only a modest impact from tariffs on prices, activity and the labour market. Says the inflation boost is likely coming, but actual inflation indicates renewed progress towards the 2% target. Fed's Bostic says the inflation outlook won't be clear by July. So looks like they and the market is coming around to the fact that we won't get nothing in July. OPEC Plus is apparently looking at another supersized oil output increase, according to reports, but no doubt we'll get 50 million of those different sources reports over the weeks ahead. Right, trade stuff. Little bit of fun and games Friday night. Trump started off saying that July 9th date is not set. We can do whatever we want, and I'd like to make it shorter. So here we go with all the run up to the deadline chest beating. Then he dropped a bit of a bomb on the loonie, saying he's ending all trade talks with Canada, and we will tell Canada its tariff level for the next 7 days. And that's exactly why you saw dollar CAD doing that on Friday when he dropped those bombs. So again, this is what we're going to be facing up to that 9th July deadline. The reason for that he ended all trade talks is because Canada announced they were putting on a digital service tax on American technology companies, which Trump called a direct and blatant attack. After that happened, Canada decided to drop their digital service taxes in an effort to get back to US trade talks. And they came out and said that trade talks with the US aim for a deal by the 21st of July, hence why we came all the way back down again. So that was a good bit of policy by Canada. We slapping on a digital tax and then playing a game of chicken with Trump that they lost pretty quickly.
Yeah. What I took from it is that we discussed this kind of Canadian policies and tariffs and blocks or quota and stuff that some of the local Canadian provinces could put their own laws in place or their own tariffs in place, and it does look that Carney is taking back the reins and is going to decide about things himself, which would make it for us a little bit more easy to understand and follow the whole story. So that is mainly what I took from it, more than even his 180. The thing is that this digital tax had been decided and before he took the helm, right? So that is maybe why he just wanted to stamp his authority and say like, no, you know what, if we are going to negotiate stuff, it's going to go through me.
Yeah, and well, you've got to wonder why he let it go through in the first place then. But this is going to be a similar bum fight with the EU as well, who are also looking at digital taxes. Even the UK, they must have kissed the ring over those to get that trade deal through, or it's something that's going to rear its head down the line. So again, another reminder that all this trade stuff that we've got going on is still only on specific areas. It's not wholesale. It's not get a trade deal done July the 9th and that's the end of it. There's pharma to come. There's other sectors to come. This is just on auto, steel, and all that sort of thing. So it's not over until it's over, although the market may get some relief if we get through this deadline unscathed, shall we say. Right. Anything else on the headline front, Kay?
No, minor stuff. I will say minor stuff. I mean, Ishiba seems to be doing a little bit better. We're going to have elections over there in 3 weeks. Looks to take back a little bit. And what I've been saying for years now is a lot of people are talking about, yeah, Ishiba is in trouble and whatever, but it's the other side of the other side of the political landscape. They still can't get their act together to bring one person or so in front that could rival the LDP right now. So I think that is more again where we have to look at in the upcoming weeks. Can they get somebody to stand up and really stand up and deliver? You remember?
Yeah.
That was that is
Adamant.
still not the case in Japan.
Yeah, absolutely. Right, as you mentioned, got a busy week. Tomorrow, is it tomorrow? Yeah, today we've kicked off in Portugal the ECB Sintra Economic Forum thingy majiggy. That's got all the big wigs. That starts tonight sometime, just with a dinner and the guard waffling on about a load of old crap probably. So that's not to be important. Tomorrow at 2:30 local time, which is also 2:30 here in the UK, because it's in Portugal and they're on the same timeline. We get all the big wigs having a little panel event that they tend to do. We've got Powell, Bailey, Ueda, they're all there. So it's going to be that's going to be a big one if we get any market moving comments at all. The rest of it's going to be a load of old waffle in between everything else. So that's the big event tomorrow in the central bank world. Today, not much else coming out from the US or anything. We've got the flash number from the German CPI. That's obviously after all the regionals. That's the pan-German number. Tomorrow, a few bits and bobs, but it is PMI finals day, manufacturing. So we're getting all those numbers from Europe and elsewhere, as well as the Eurozone flash inflation number. And also get the ISM later on and JOLTS as well. On Wednesday, we get Aussie retail sales. And then not a lot until we get Challenger jobs and ADP numbers. So a bit of a quiet Wednesday in terms of data. But then Thursday, it all kicks off because we get all the final services PMIs, including the ISM, and it's jobs day, which reminds me I better get the NFP report, the NFP compo up and running pretty quickly as we're a day short this week. So Thursday is going to be a big old one. And then probably after the ISM, liquidity is going to fall off a cliff because everyone's going to be going on and clearing off for that July 4th holiday and a nice long weekend in the States. Not much data out from Europe. On Friday, a couple of bits and bobs, nothing major. It's probably going to be a bit of a quiet one. Maybe even Trump or keep quiet. He'll be off on the golf course or something. So we shall see. So that's what's coming up this week anyway. Anything else you've got your eye on this week, Kay?
No, but I think interesting tomorrow, or potentially interesting tomorrow, the conversation perhaps between Lagarde and Powell. Powell will not talk about the currency, but Lagarde, as we know, has several times brought up the fact that she and other ECB bots agree and welcome the investments in Europe, and I'm not sure whether it will come up to in the discussion, but it could be somewhere a bit interesting, that one. But then, yeah, obviously on Thursday, Ryan, it's a real avalanche of data and ahead of a long weekend, it's going to be a hectic one on Thursday. So we better keep some energy and some room in our books to react on Thursday, because we could really see quite big moves there.
Yeah, I haven't actually looked to see what we're expecting this week from the NFP. Let's have a quick butchers, see if we can get a number. Where are we at Thursday? See, force of habit. Come on, there we go. Don't know if we've got expectations up yet for the NFP. There we go.
120.
120. So yeah, thereabouts.
It's still in the current context. It's still a relative growth number, not a big one, obviously, if it comes out of at 120, but relative to growth is still a number which is above the red line, and give and take 80 to 100K or so. Anything above is still meager, but is still growth. So there's no big red flags expected yet in this week's number. And we know that a lot of people are now looking at August, September data to confirm whether the job market is going to finally slow down or not.
Yeah, it will be an apt time to pull a wobbly one just before that holiday.
Oh my God!
When the markets.
Imagine where everybody is expecting a slowdown to start a 300K number. Also, we're going to have to put our tin helmets on.
Yeah, tin helmets and wellies. Yeah, definitely. But yeah, we'll talk about the NFP later in the week, as usual. Right, so that's got you all up to speed. What's coming up this week, anyway? So let's have a look at prices. Yesterday's we will look at gold, no problem. I might as well stick on dollar CAD. Still a bit short on this one. I wasn't actually at my desk when this lot happened. Fortunately, my stop remained intact at 137.60. So fortunately there. So that's at least confirmed this level up at the 50.55. Anyway, sorry, mate.
I say, wow, you should have played Euro Millions on Friday. Huh?
Yeah, I know. Tell me about it. Maybe if I'd have been sitting at my desk, I either would have panicked or I would have maybe had it back. I don't know what.
Yeah, but sometimes that is the thing we talk about. I mean, you put on a position, and then the market will do what it does. You have your stops, you have your plan, you trade your plan, and then it's up to the market. And sometimes we do get lucky because our stop is placed at the right point. And then it's in that case, it's best perhaps not to be in front of the desk.
Yeah, you're probably right. Yeah, I might have done something stupid and got out of the trade. Not that, I mean, I wouldn't have been that bothered if I got stopped out, because I've been cutting all the way down to this lows anyway. But still. But what have we done today? Well, as I mentioned last week, we did nothing at the 136.50 on the way down. Then we held it on the way up. Then we waffled around. Then we held it before this spike. And we've held it this morning. So this 136.50 once again becoming a bit of a pivot level. So if we're going to head lower, need to get back under there as a first step, but back above 36.80, 85 and holding it will probably give us a kick on into the 137s, which also showed up as resistance overnight at the figure there, but low liquidity moves for that one. Euro dollar not doing an awful lot. It is banging its head though on this 117.50. I took a little bit of a short on that PC data last week, but the market wanted to do its own thing, so I did manage to take a bit of profit on it. I'm still in it. I'm just sitting on it. I'm not bearish the euro in any which way, shape or form. I just traded the data point, took a bit off, and now I'm just sitting on the horse trying to see if I can stay on for a little bit longer. But I wouldn't be surprised if we go on and break it. This trend as of yet is not for changing whatsoever, but a bit longer banging ahead on this 117.50 might see a bit of a steeper pullback, but who knows, headlines and whatnot, and end of month as well. And you got to remember, today's in the end of month, in the quarter, end of half year. if we get any moves around the fix, we can also see some moves on the first part of the second half of the year as well, so i.e. tomorrow, because the market, if it's rebalancing and closing up positions for half-year reports, can reallocate, put other positions on in the first month of the year. So don't rule out seeing some fixed action tomorrow as well. I don't know what much else to talk about. Aussie dollar, that I'm still long. Every time we've got up to 65.50, I thought about chucking out my my buy stop, because I'm long at 55 at the moment. We didn't get the follow through as I wanted. We've had a few goes at it now, so we're not dipping that far away from it. So it's still keeping fairly bullish, but yeah, I don't know. Now I've seen that resistance again at these prior highs, just has me a little bit cautious. So I'll keep my close eye on that one. Right, Cam, I'm going to punch it over to you, mate, for a couple.
Okay. They're actually all banging their head against resistances. I mean, whether it's the Aussie, whether it's the Kiwi, whether it's the where am I? Yeah, the Kiwi is another one. Whether it's the euro, they're all banging their head against resistance, which may make us think that if we get, as some models are expecting, if we get that last rush out of the dollar or selling some dollars, if already, because as I said, I see divergence between the year to date and the shorter term in some of that stuff. If we get a last rush out of the dollars, we could see a bit of a give back perhaps starting of the week. And you look at this Kiwi, we're also banging our head against this 60.85. We are still above this 38.48 zone, but again, we are shying away from it. We went there again this morning, very early doors, late Asia, and we are shying away. Ryan just showed the Aussie, the same thing, and then you look at the cable, same thing happens. We went into my 137.47 resistance, gave it a couple of tries, gave it another try this morning, 137.40, and we are shying away. And I think it started somewhere on Friday. We had those sales in dollars, and then no follow through. And I think we need to be, at least I will be, a bit cautious. As I say, if we see a last rush into our 4 p.m. or so in London, and we can't hold it, let's say, especially after the fixing, it could mean enough for the start of the month. So I'm going to be cautious. The next level above is around 138.15. And then if you look at the downside, we did hold the 136.80. So that's an interesting little hold. And then around here, I think 136.5 short-term trend line. That is also a little bit of an intraday support if we ever get there. For the bulls in cable, the short term at least, I would be a little worried if we start to get back below 136.15.20 in the short term at least. That short term line here is we also have a trend line which comes from a little bit further away, and the break we had a bit of a retest and then the move up, and I would be a bit cautious if we start to break below 136.15.20. Okay, so this is a rather important level I am watching carefully to know if this move is going to hold in the end, or if we start to correct a bit deeper. All right. And again, we're seeing a lot of those things, but there's one currency, as I said, that is bit to all boots, and we're seeing that nearly on every month end. It's the Swiss franc. Despite a lower KOF, despite the weaker numbers in Switzerland, despite complaints about the stronger Swiss franc, we're seeing again a month end where the Swiss franc is bought. Okay, where can it lead us? Maybe 93.30 or so in the Euro Swiss, but is it not more a dollar Swiss move? I'm still wondering, and because this one is still looking quite bearish, and the risk for the end of the month, we are trading around 79.75. But since we have broken down, since we've broken below 81.35, then below 80.80, then below 80.40, we never actually look back, and we just continue to slide. Now again, be careful, because this again could be a month and quarter and move, and we could be that we see a bit of an acceleration into 4 p.m. London time and then start a bigger correction, which I think is possible. Whether it comes on in the form of Euro Swiss or dollar Swiss, we don't know yet. But in the meantime, there is another 5 hours to go, and in 5 hours, a lot can happen in currencies. But I would not be surprised if this slips and slide even further into 4 p.m. London time, and then we will see what happens. The main thing to take away here is that we yet see another month and yet another month of Swiss franc buying towards the end of the month. So this is something that we need to continue to monitor, because assuming that maybe the next month or so we are going to see a change in pattern, that would mean that we could be on the way for much bigger corrections. But in the meantime, we are seeing this pattern pop up again and again and again. All right, gold and silver, and I'm going to have a look at oil as well today. We broke. Well, we traded just below this 32.55.60. Went for a ride at the open, really very very early. But we stopped on the 61.8, which is perhaps interesting, 32.45 ish. That's our low from the other day as well. So that is the level that we are watching now on gold, Daresh. Can it hold? Yes. Do we have fixings in metals? Yes, because apparently WMR started to produce fixing rates. So we may be in for a bit of a wobbly market this afternoon as well in gold and silver. I have no clue which way, but we are stabilizing somewhere in the middle of what I would say is the short-term range. 33 and a quarter, 33, 35 really will need to break back up before I think we can say that the move starts again. Obviously, it's good enough for a hold here, but I would not shout victory. And as I told last week, I'm not interested in getting involved in too much here, because I don't know at all where the next 40, 50 bucks is going to come from at this point in time. But 30, 32, 45, 55, interesting zone to watch. Silver, a bit the same, but I would still argue it's holding better than gold. We are continuously seeing those little fast drops on Asian time, perhaps. Here that was rather later in the day, but here was very early in the day as well. But we are seeing continuous bids on drops into the mid low 35s. Again, I missed my entry. I'm just left my entry around 35.20, I think it is. Yeah. And keep on missing it, but that's okay. I'm not in a hurry. But just note that we see those continuous little dips, and we're finding still better demand, in my opinion, in silver. Still the same big zone, anywhere between 34.90 and 35.15. There is a big support zone, in my opinion, in silver. Oil, and again, another rally, and again, another failure, as we've been already talking about the different shows. We are on interesting support here, in my opinion. We spike higher here, spike higher here, spike higher there, and then finally we broke up, and we are back there. Anywhere between 63, 65, 63 and a half, and 65. We should find support. If we don't find support in this zone, I think it's big enough for this thing to trade, perhaps not all the way back down, but at least going to have a look at the low 60s in oil again. But again, as I said, it's a big enough zone. So if we ever would find, if we find support here, let's say before the month is over or come tomorrow, we are finding support in this zone, it is possible we see a bit of a bounce. The problem is, as Ryan already spoke about, OPEC Plus, they don't mind continuing to up their output. So could be that we are in for a bit of a break. And I would also think about those gluts in the ports, and we are looking at especially the European ports. There's a lot of ships waiting for to load up. There's a lot of gluts there. It perhaps has an additional weight on this oil. I'm not going to catch a knife. I think there is a real risk for this to actually trade quite a bit lower here. And I think that's it, Ryan, for today, unless somebody else wants to look at something. But I'm kind of done looking at what I wanted to look at.
Cool. Thank you very much, mate. Yeah, no problem. We can call that an early day today. It's only a Monday. We've got a busy week ahead, so we'll have a nice early flow show today. Thank you as always for coming and watching us here. Catch us on Face, and today is the last day to get on our mailing list, find out what's coming up at ForexAnalytix, and get that draw for a trader funding account. So get on it. That's the last day today. The draw will be announced, or the winner will be announced over the course of this week. And again, that reminds me to get the NFP competition up and running, so look out for that as well. Have a great day. Have a great week, everyone. We'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.